If you looked on a globe and found the most remote, landlocked point, this is where you'd end up. And it's near this spot where Kazakhstan and China have built a giant multi-million-dollar land port, economic zone and border towns entirely from scratch. Their goals? To lure manufacturers to the area that might want to take advantage of an overland shipping route to Europe, establishing Kazakhstan as a logistics and manufacturing hub, and to strengthen an economic partnership that's been decades in the making. But on the China side, in the heavily policed Xinjiang province, known for its detention of Muslim Uyghurs, it isn't proving to be the ideal business environment.
In the early 90s, the people could travel without visas, but very quickly it finished. And now it's difficult for Chinese to get visas to Kazakhstan, and it's difficult for Kazakhstanis to get visas to China. And now with what's happening in Xinjiang, it's becoming, even more problematic.
So can money alone attract businesses to a route so far from the beaten track of global trade, where geopolitical tensions run high?
Kyorgos is on the Chinese-Kazakh border, near an area that geographers refer to as the Eurasian point of inaccessibility. This is literally the middle of nowhere. By definition, it's one of the furthest places from any major ocean. We have satellite imagery of that area in 2010, and there's nothing there. It's barren steppe.
You flash forward 7 years, and you see this gleaming infrastructure that's there.
If everything goes to plan, it will be the largest dry port in the world. But the port itself is only a small piece of the puzzle.
They have not only new train track, but also facilities that are set up to transfer cargo from the Chinese gauge track, which is more narrow, to the former Soviet track, which is broader. And they also have a special economic zone, and they've set out an area that they hope will be developed into manufacturing facilities. And they even have a town that they're building near this that is supposed to house workers.
On the China side, a town of 100,000 people called Kyorgos has been built in just 6 years. These new towns, train routes and facilities are what China and Kazakhstan hopes is the start of a major rush out west. But so far, it's not attracting clients as they'd hoped. Although there has been a steady increase, experts say it's due to heavy subsidies given by the Chinese government to companies that use the new train routes.
And were those subsidies to be taken away, I think you would see some of the usage go down in those routes. We haven't talked about the fact that there's a lot less coming back too from Europe, just given the trade imbalance, and that's a structural challenge that these routes face.
Because China exports so much more than it imports, trains often return empty. And with border crossings, different rail gauges, and political issues not encountered on maritime routes, the majority of companies using sea or air are unlikely to switch to less predictable and significantly more expensive overland freight shipping.
So I think last year Kyorgos had 160,000 TEU, which are, think of it as containers that are moving through there. And to put that into perspective, Shanghai, which is the world's busiest port, had 43.3 million, 270 times what Kyorgos is doing.
Although it doesn't appear to be a great investment by China, that's not the whole picture. Kyorgos has become a highly publicized flagship project of Xi Jinping's One Belt, One Road initiative. Promoted as a reopening of the ancient Silk Road that transported goods overland from China to Europe starting from the 2nd century BCE. Including Kyorgos, the initiative promises to invest over $1 trillion in nearly 140 countries and organizations.
She hopes that by extending credit and creating a network of economic dependencies around Asia, Africa, Latin America, and Europe, China will also be able to punch at its weight in terms of global influence.
Critics call this method infrastructure imperialism, but it's also been called infrastructure diplomacy, and it's not the first time it's been used.
The Roman Empire famously built roads and highways spiraling out from Rome as a conduit for military and commercial activity. The US Marshall Plan in the years after World War II was an attempt to shore up Europe to create a bulwark against the threat of Soviet imperialism, and a big part of that was US financing for the reconstruction of Europe after the devastation of World War II.
Working together with the aid of the Marshall Plan, the nations of Europe have come a long way toward recovery.
And some would argue it worked. The countries were rebuilt and in return sided with the US, limiting the influence of the Soviet Union.
Where China differs, I think, is on the pace and the scale of the activity. The Marshall Plan was big, but $15 billion in spending, even back in 1948, wasn't that significant. China, on even the most modest estimate, is spending hundreds of billions of dollars and building not just in Europe, but around the world. There's also an economic dimension. China has the world's leading construction companies. It has enormous capacity to produce steel and cement. China hopes to export its production capacity, creating new markets and new profits for its businesses.
The main question on economists' minds: will China's strategy of building first and finding demand later ever lead to real growth?
China follows a field of dreams strategy on infrastructure building. If we build it, they will come. If we go back in time around 10 or 12 years and we think about one of the main stories in China, it was the ghost town narrative. China had built enormous amounts of real estate and there was no one living in it. And journalists in China traveled around and they saw cities in the desert that were unoccupied, tower blocks where no lights came on at night. What happened though was that over a period of years, with policy support, with incomes rising and with continued urbanization, a lot of those ghost towns filled up. I think about Zhengzhou, for example, a ghost town 10 years ago, now a thriving urban center. Beijing's hope for its Belt and Road project is that a similar dynamic will play out. They built early, they provided supply ahead of demand will catch up.
And China is set to get something else out of all this: the development of Xinjiang, the country's largest administrative region that borders Kazakhstan.
Yeah, one of the expressed goals for the Belt and Road, expressed by Chinese officials, was to develop Western China. And it was also to try to address some of the inequality that exists between Eastern China and its coastal cities and Western China inland.
That economic disparity, along with the government's repressive policies against religious and cultural practices, has led to clashes between the local Muslim Uyghur majority and the more well-off Han Chinese who live in the area. By developing the economies of Xinjiang and Kazakhstan, which share many cultural similarities, Chinese policymakers hope to put an end to unrest in the region.
The same communities live on both sides of the border. We have a lot of Uyghurs in Kazakhstan, we have a lot of Kazakhs, 1 million Kazakhs living in Xinjiang. So there are these connections, and Uyghurs in Xinjiang, they have family links with Kazakh citizens. We are Muslims, we eat the same food, so there are important and deep linkages.
Xinjiang has a large Kazakh community, about 1.6 million people, while Kazakhstan has a large Uyghur diaspora with a population of around 261,000. This link could be an incentive for China to develop the region and calm ethnic tensions by investing money in Kazakhstan.
The main goal is to become one of the 30 most developed countries, which implies modernizing the economy, upgrading the economy, diversifying it for sure. I would say quite a few projects wouldn't be possible without China, not only without Chinese money, but Chinese kind of belief in the usefulness of these projects.
верим, что шелковый путь вновь меняет мировой уклад, создает новую глобальную реальность.
A year after the program was announced, President Nursultan Nazarbayev announced their own infrastructure project called BrightPath. This project works in tandem with the Belt and Road Initiative, a $9 billion domestic economic stimulus plan to develop and modernize roads, railways, ports, IT infrastructure, education, and civil services, and is necessary to lessen the country's dependence on oil, which has seen a sharp decline since 2014.
It has this natural resource wealth that is not going to exist forever, and I think in order to make the most of that, they need to make investments with an eye toward the future and what kind of economy do they want to have. And I think they want more services, a little more manufacturing. All of those are goals that you see in small ways in the planning around Kyorgos.
But it hasn't come without resistance. The shift towards China and away from Russia has played into deep anti-Chinese sentiments and fears of China that date back hundreds of years. Kazakh nationalists complain that their country, having gained independence from Moscow, now risks becoming a satellite of Beijing.
And these fears, they are linked to the territorial disputes that we had historically. In some Chinese textbooks, the parts of the territory of Kazakhstan are considered part of historical China. And in fact, there was kind of this dual jurisdiction of Kazakh lands.
When the Kazakh government announced legislation in 2017 to let foreigners rent land for long periods, protesters took to the streets to denounce what many saw as the start of a Chinese land grab. To make matters worse, worries have grown in recent years as China has built a sprawling surveillance state and internment camp system to target its Turkic Muslim population, especially Uyghurs.
But now, over the past couple of years, Kazakhs also found themselves inside these camps. So the public opinion got even more concerned with what's happening in China and what they're doing to our co-ethnics.
It's unclear how many people are in some sort of detention, but the US State Department estimates more than 1 million people have been detained since 2017. China, who at first denied the existence of the camps, is now doubling down on the need for them and beginning to defend them as a vital weapon against terrorism. This has led the US and EU to increase sanctions on companies who operate in the region.
I do think that Western China exposes what is really a big contradiction in the Belt and Road. The Belt and Road is advertised as something that's supposed to increase connectivity between China and the world.
The belt connects to land, the road moves on the sea. The promise that they hold is during prosperity.
You go into Western China and there are security checkpoints everywhere, and you have minorities who are being detained. It's abhorrent from an ethical standpoint, but it's also, in very practical terms, a horrible business environment. And so China has talked about increasing connectivity, and yet in this area it's putting up barriers not only for the flow of goods and people, but also for data.
The difficult business environment may be why Kyorgos hasn't been met with the enthusiasm governments had hoped for. And with the China-US trade war, a controversial security law in Hong Kong, and the global pandemic, China is signalling a tougher stance elsewhere on the Belt and Road. The $62 billion Chinese-Pakistan economic corridor has been scaled back amid Pakistan's increasing debt problems, while a major port deal in Myanmar was slimmed down from roughly $7 billion to $1.3 billion.
I think we're not really going to know how many white elephants are roaming along the Belt and Road until a bit longer, but we are now increasingly in an economic environment where some of that I expect is going to start bubbling to the surface.
At this point, it's unclear how much China is willing to spend to make the Kyorgos dream a reality.
20 years ago, it was America, it was Europe, it was the World Bank that was funding infrastructure development spending around the world. As the West has been rocked by a series of crises and shifted the focus of their economic policy back towards problems in their domestic economy, a huge gap has been opened up, a huge infrastructure funding and expertise gap. China is now moving into that space. And on a project-by-project basis, there are successes and there are failures. The larger picture, though, is that as China's dollars continue to flow, as China's concrete continues to pour, China's influence continues to increase.